On the line from Sydney, Paul Bloxham, chief economist for HSBC Australia. And Paul, are you surprised by these strong figures coming through?
They were quite solid. We do actually in Australia have a weekly survey of consumer sentiment, which was signalling that we'd expect a rise. So we weren't particularly surprised that it did pick up, but they are still looking like reasonably solid numbers, especially given all of the financial developments that have been happening through September.
Yeah, that's right. So can you tell me about the differences, why consumers are confident, but business confidence slipped so much that when we saw yesterday those figures?
Yeah, well, both of them are still slightly below their average, but of course they're going in different directions. I think the story for consumers in part reflects that because of what's been happening financially in the world, the Reserve Bank is less likely to be lifting interest rates. You've got to keep in mind in Australia that over 90% of mortgages are at variable rates, so consumers tend to respond to their expectation of what they think interest rates will do, or what the central bank, what the Reserve Bank of Australia will do with interest rates. And of course, these global financial ructions mean that the Reserve Bank is more likely to be on hold. So I think that's not an unreasonable explanation for why we've seen a bounce in consumer sentiment. Consumers now don't expect to see interest rates rising this year, as we don't either. The economists don't think that the interest rates will be rising, and that's seen a bit of a retracement.
No, that's interesting. So interest rates seem to be the dominant factor. But what about the fact that 10,000 Australians lost jobs in August, whereas economists had expected jobs to be added to the economy?
Well, what you've got to be looking at in that regard is also that the unemployment rate is still relatively low. The unemployment rate rose from around about 5% in the first half of this year. It's risen to 5.3%, and so it's still a relatively low unemployment rate, pretty close to full employment. The other part of that story, of course, is the rise we saw in the unemployment rate was actually quite isolated to Queensland, and of course we had the Queensland floods earlier in the year. So in our view, we think that the unemployment rate rise is probably a lagged response to what's happened in terms of the Queensland floods, which we'd expect to be temporary. So this is just another piece of evidence that really the Australian economy isn't just about to fall off a cliff. There may be a bit of a slowing going on as a response to the global financial developments that are happening, but really the Australian economy is still in pretty good shape.
Okay, so does this at all change your views as to your growth forecast for Australia?
It certainly doesn't change our view on what we think is going to happen with the RBA. We still think that they will be on hold for the moment as they wait and see and watch what's going on. I think Australia we still think Australia has concerns about inflation picking up, and of course these global developments will mean that growth, the risks are to the downside in terms of growth. So to some degree, the global developments we've seen in the developed world will probably take a little bit of the edge off Australian growth and may see those inflationary pressures start to become a bit more contained. But we think that the RBA will be on hold for the rest of this year.
All right. Well, Paul, thank you for your insight.